Well, earnings season is wrapping up, and as we close out the trading week, all eyes are on Deere and Company and VF Corp, which both reported financial results on Friday morning. Let's bring in Craig Erlam, a senior market analyst at Oanda in London. So, Craig, let's talk a little bit about Deere and Company beating estimates on the bottom line, but first quarter revenue was down 13% year over year. What do you make of the decline?
Well, I think it's a little bit disappointing, of course, and I think really what's most concerning with regards to these results is their outlook really for the rest of the year, and I think this is what could possibly weigh on the stock going into the coming trading session. I guess one bright spot from before the earnings release, though, was Warren Buffett's Berkshire Hathaway actually increasing its stake in the stock, which would maybe shore up some fears that investors may have about the outlook. Of course, they did highlight the farming industry and the fact that farmers are maybe less inclined to buy new machinery at a time when crop prices are stalling. So there is some positives to come from this report, like say the bottom line, but then I think there is also some concerns which may potentially weigh on the stock going forward.
Yeah, and of course, we're certainly dealing with some food deflation across the board. Let's switch now to apparel maker VF Corp, the maker of the North Face products. This is a space that has been rather bruised as of late, and the company, there you see it, missing estimates on the top and bottom lines. What do you have to say here?
Well, again, it is quite disappointing, and I think the consumer sector is one area where people are going to be focused very much on. With, of course, we look at the consumer at the moment, and particularly in the US, I guess, and you're seeing these wages growing very slowly. We're not really seeing the benefits from the decline in oil prices, which has boosted disposable income. So we were looking at the consumer sector really right now and hoping to see a boost, but like you say, the results aren't really saying that. But I guess again, you look at the outlook, and they're very optimistic about the outlook for the rest of the year, particularly the second half of the year. And really, when you're looking at this from an investor standpoint, if the company's very optimistic about the second half of the year, then it maybe inspires you to be a little bit more optimistic about the stock as well.
And of course, VF Corp hit by the strong dollar as well.
Of course, and this is going to be a common theme. It's been a common theme back in 2015. I do think companies are going to start to manage this stronger dollar, I guess, as we in 2016 and as we move into 2017. They're maybe going to benefit a little bit from the fact that the dollar is looking a little bit softer now because rate hike expectations are a little lower as well.
And shifting to the broader markets, we sort of saw a fade in the rally in Brent crude as U.S. crude inventories reached a new record high. But of course, we're still above $30 a barrel, perhaps adding more evidence to that notion that 30 was the bottom here.
I'm not necessarily convinced that this was the bottom, if I'm perfectly honest. I mean, we look at like inventories, like you say, this is an 8-decade high. We are still at these huge levels of inventories, and yes, we've seen this freeze, for example, in output agreed between Russia, Saudi Arabia, and some of the other OPEC members. But this doesn't really address the issue, the fact that supply is still outstripping demand, and nothing is being done in order to really reduce this. And therefore, if we continue to see these inventory increases, then I'd see no reason why prices wouldn't start to fall, unless, of course, we see a decline somewhere like the US as a result of these lower oil prices, which we're not necessarily seeing huge evidence of yet. We're still seeing increasing supply. We've still got Iran, which are looking to increase supply by 500,000 barrels a day. And when you've got this backdrop, I don't see why oil prices would rise above current levels if the fundamental situation isn't going to change and inventory is going to continue to grow.
All right, Craig Erlam, a senior market analyst at Oanda in London. Craig, thanks for your time.
Thank you.
I'm Scott Gamm, and you're watching The Street.